Good morning, traders. It is Thursday, October the 3rd. Taking a look at the charts, we've got the SP 500 daily chart. We've got the futures here, and you can see a big waterfall sell-off. Really, we had this first pullback, this sideways consolidation, and then really gave way the last two trading sessions. Now, overall, the market is oversold. And if we just pull up these cycles just a little bit here, you can get an idea of more or less the momentum in short-term cycles are in this lower reversal zone. The overall trend is more or less down now, and so now we get into this mixed market where it's oversold. Uh, the trend is to the downside. It could continue or it could bounce. And overall, we had panic selling in the market yesterday, about 5 to 1 on the NYSE, meaning there's 5 shares being sold to every one share being bought in terms of if they're panicking out and forcing on the bid versus those panic or buying on the ask. And when we see that, we usually get into a market bottom. Anything over 3 signifies an intraday bounce. 5 is kind of in the middle. When we're looking at 7 or 8 on that ratio, it usually see a washout low the following day, which would be today, and then we see some type of rebound. So it's not quite that 8 level. It's right between an intraday bounce and a significant washout low, much like we saw over here. This was a big panic washout, and then the next day you get this, or sorry, this was the 7 or 8 ratio, and then the next day you get a big washout and a rebound. And we didn't quite get that type of panic in the market. So overall, expect sideways chatter or lower prices going forward. But overall, the quick downside and the breakdown and right into into the middle of this area here is key support for some type of bounce or pause potentially. So overall, markets are down, money is fearful, and it is starting to flow into the safe havens like bonds. If we take a look over the bond futures, you can see it's continuing to move higher today, and this should continue to grind its way higher. It's already had a really nice move. This first move in this little bull flag is the halfway mark. If we were to throw a Fibonacci extension, you can get an idea of where that upside target is. More or less, we're looking for bonds to work themselves all the way up to the 618 and then potentially up to this 100% measured move, which is the previous pivot high in the market. So overall, there's still some good upside there. And the nice thing about bonds is when the stock market goes into a corrective phase or into a downtrend, because we're still in a bull market, we get into this type of price action right here. We get into this initial move, and then the market can chop around and trade sideways for quite a while. Tougher to trade, and even if you're short, you're not really making anything because it's just oscillating unless you're doing very short trades, but really it's only a 1 or 2 day downdraft, and then it rebounds right back up. So the play for a downtrend and negative kind of market at this point is to get into bonds, which during this time will continue to slowly trend higher and higher and higher versus you locking your money in here and riding this roller coaster of profits, no profits, profits, no profits. So that's where we are. Instead of getting short the market, there's a nice initial drop. The first drop in the market is the kind of the easy money for momentum in day traders. You can catch that play, but after that, we're equivalent to down here. We want to focus on what is going to be the next trend, which at this point should be bonds, and we should see them continue to slowly grind their way higher over time here. Looking over at the VIX, let's take a quick look at the VIX. VIX spiked up here yesterday, pulling back a bit today. Overall, fear is in the market, and that's what we want. We want to see fear spike. And even if the VIX continues to slowly fade down, the elevated fear means bonds should continue to perform well and move higher. Looking over at other safe havens, let's take a look over at gold. Gold is flat today. Let's just zoom in on the price range. You can see it has put in a nice 3-wave correction, an ABC, which is A, B, C. A break of this previous low here is what runs the stops. It's this C move here that cleanses the market, shakes it out, and then we could be putting in a very significant bottom. But at this point, we are right into the heart of this resistance area. Was support, became resistance, then started to trade through it, and then kind of held on a little bit and broke below it. And so we're stuck here. It's the 50-day, it's the 20-day moving average, it's price, horizontal price resistance. So we'll see if gold can get some traction. The safe havens I do feel as though could start to perform and start to break out of this range, and we could start to see a new uptrend start. But technically, the momentum in the trend is still red on our trend analysis chart. The trend is still down, and we're not looking to try to get in early. We're looking to get in when trends are confirmed and we see follow through buying. We want to catch this area over here when the market gets into a new trend and breaks out. We want to catch this nice strong move, not try to get in down here where we can get swung around and chopped out of our trades. Looking over at silver real quick, down 0.6%. Same type of thing. Nice A, B, C correction. It's bounced up to resistance. We'll see if metals can start to move higher or if they're going to be stuck under those areas. Miners, same type of thing. Nice uptrend, starting to break down and form lower highs, lower lows, and it's kind of stalling out here still. It's not outperforming. We would like to see miners outperform gold and silver bullion, but it's not. So it's still a sign of weakness, and we could see potential bigger move still unwinding here in the metals and miners. Looking over at natural gas, up 0.6%. It really has just flushed out here. I think a lot of it has to do with the extra heat wave going through the southern side of United States, and we're getting down into this support area. I'm looking for some type of volatility, big price bars, big reversal, something to potentially stick a toe in the water and get long for a knee-jerk reaction, bounce back up. I think we're very close to it, but I just haven't seen any real signs of life just yet. Looking at crude oil, down 0.4%. Again, we've been looking at this chart for a while, and really it is an ugly chart. No insight on it really. It's made a low, and then it made some higher highs, and it made a lower low over here, and then it made a higher high over here, and now it's breaking down below this low. It's really a noisy chart. Lots of support and resistance. All the moving averages are just a giant tangled knot, and we just don't really want to get involved in it at this point. Just let it work itself out until there's a signal or no rush to trade crude. Let's take a quick look at the US dollar. US dollar had a really strong pop a couple days ago. Again, right to the upper end of this range. Let's just draw a line across here. Right to the upper end of the range. It's pulling back. We're expecting it to potentially pull back even more, but we are looking for a $100 mark on the US dollar index. Now this is the UUP ETF, so you're not going to see $100 on here. This mimics the price action of the dollar, but overall we are still looking for higher dollar, and if we hit that 100 mark, it could be a very significant turning point for precious metals. I feel as though it'll be a resistance area. It was a resistance area going back several years at several different points. So if we hit that level and the dollar starts to break down, that would be the big muscle behind potential metals moving up in a significant way later this year or early next year. Anyways, that's really it for this morning, and I'll talk to you in a little bit. Bye-bye.